In this episode, I'm going to talk about how do you calculate your position size, the common mistakes that most traders make. All of these so that you can potentially decrease your risk, increase your profit so that you can sustain your business in the long run. We are going to talk about that coming up next. Position size also means lot size. Now, lot size is a very important part of money management that you cannot afford to ignore, especially when you're a trader. The difference between professional traders and normal traders who are not making money is one thing: good psychology and good risk management. You can have the best strategy in the world, a 99% win rate. If you don't take care of your money management, nothing is going to change. Nothing is going to change. To put it simply, what is lot size? It's the amount of units of the currency that you buy or sell in that particular trade. And if you're somebody who trades futures, this is very similar to the so-called contracts. So a lot of people ask me, Karen, which one should I determine first, the lot size or the stop loss? So what a lot of beginner traders do, they think in terms of, okay, how much money can I earn in this trade? Then they decide their lot size first. And then once they've done that, then they determine the level of the stop loss. Now this method is wrong. It is wrong. When you decide where to put your stop loss based on your lot size, you're not that really consistent because sometimes you put your stop loss way too tight, then you get stopped up really easily. A lot of people determine their lot size. Oh, I'm feeling good today, then I'm going to increase it. Feeling not so good today, then I'm going to decrease it. Then your risk is going to be not constant every single time you open a trade. So the right way to do it is actually determine your stop loss first. Then you go on to determine your lot size. This is the right way to do it. And why should you determine stop loss first? Because in order to calculate your position size or your lot size, you need to know this value first before you can determine this value. I have no idea how people can predict the lot size without even knowing what their stop loss are. The only way that you can do this is when you determine a lot size based on your emotions. The way you set a stop loss is going to be determined by market conditions. Some market conditions you need a wider stop loss, some market conditions you need a tighter stop loss. And when you decide your lot size first, then you're not trading based on market conditions. So here comes the ultimate question: how do you calculate your lot size properly? You need four things: capital, risk per trade, value per pip, stop loss level. You take your capital times your percentage per trade divided by your SL amount from your entry level to your stop loss. How many pips is it? Times value per pip. By now you've already watched my video on pips. Different currency pairs have different value per pip. If you haven't watched that video, go check it out. Otherwise, this will get you a bit confused. Because you need value per pip to calculate your position size. The good news again is you don't need to calculate manually. There's a lot of online calculators. Some brokers even have position size calculator installed for you, like my broker. They install it for me, which is pretty nice. Only use this to double confirm, or when you're not with your position size calculator, you're out traveling, you're trading, then you calculate manually. So to give you an example, a quick one, capital, let's say you start with a small $10,000 account. Let's say you're super conservative, you risk 1%, okay, and hence 0.01. Then divided by, let's say your stop loss level, 30 pips, okay? And let's say you're trading euro dollar, which is $10 per pip, times 10. And then you get 0.333. Correct me if I'm wrong. Then in your MetaTrader 4 platform, you will see this. Okay, volume. Then there'll be a box here. You need to type in your volume, okay? Put this number in, 0.33. Then click buy, sell. Done. So a common mistake that most traders make when it comes to position sizing, especially when they're just starting out, they don't have a calculator, or they have a calculator but they trade based on mood. When they're on a winning streak, you know, everything is going well, you're confident, overconfident, you feel like you're best trader in the world, the next signal comes. Without doing any calculation, without taking into account their risk, they are going to increase their risk and their position size. And when it comes to losses, there are two common types of traders, okay? Because losses can affect people differently. So let's say you're going through 3-4 consecutive losses, 10 consecutive losses, which I feel sorry for you. The first type of trader, they're going to increase their lot size massively. Why is that? Because the markets took my money away. I'm going to recoup everything that you've taken away from me. Revenge trading. Then there's another group of traders who would decrease their lot size a lot. Now this is a lot safer, but if you decrease it to so small just because you're scared that you're gonna lose again, then it's going to affect your overall profitability in the long run. Now realize that these three conditions happen is because a lot of traders, they are too attached to their past. It's like you have broke up and you still keep thinking of your ex every single day. To prevent this from happening, detach yourself from previous trades. You need to learn to forget what happened yesterday, what happened last week, what happened last month. Because those trades don't define you. If you let your past trades define you, you can let it define the way you trade in the future. Whatever happened last week, last month, put it one side. It's over, it's done. When you have a new trade right now, just focus on this trade. Calculate it on black and white on your calculator, and when you are able to consistently calculate your position size, maintain the same risk every time, you'll be able to trade in such a way that whenever you open a new trade, whether it's next month, next week, next year, you're risking the same percentage. Rather than 3% today, 10% tomorrow, 1% today, it's not going to be sustainable in the long run. This position size calculator is for you to keep your risk constant every single time. And when you follow it, stick to it, in the long run, you're gonna win. You're gonna win. With that, let me know in the comment section down below, how do you normally calculate your position size? And with that, I'm Careful and I'll talk to you in the next episode. Bye.